Hi guys, so let's now take a look at types of revenue expenditure. Okay, so when it comes to revenue expenditure, we're simply dealing with day-to-day expenses which the business incurs in its day-to-day operations. Okay, so here we go, here's a definition. Day-to-day expenditure, which can also help to generate revenue for the business. So it can help to generate revenue for the business. So let's look at some of these examples that I've just highlighted in this little mind map here. Okay, so first up, inventory. So that is stocks or raw materials that are necessary. Obviously, those products then have value added to them, and then they are resold. That obviously helps generate revenue. It's also a variable cost. That means, of course, the actual level of the cost will rise as you produce and sell more goods. Then we've got rent, a fixed cost, okay, without actually renting a premises or having a fixed premises. Obviously, the business can't operate, okay. Then we've got interest. Again, that's likely to be a fixed cost unless you're on a tracker mortgage, where it may then jump according to the Bank of England base rate, but you can still consider that to be a fixed cost, because interest rates certainly in the last sort of 10 years haven't changed that dramatically, okay, at all. Right, then we've got utilities. So this includes heating, lighting, water, electricity, as well as telephone, broadband connection, and so on. Okay, so all of those different elements. Administration, making sure that you've got an effective team to actually invoice for the services that you've provided or the products that you've delivered, and that they are actually receiving payments for those said products, okay, or services. Right, then postage, stationery, okay, very, very obvious. Again, the actual variable cost of these is going to rise as you sell more products. You're likely to have more need for undertaking, more delivery of all sorts of letters and packages, etc. Okay, bank charges. Yeah, okay, right, so bank charges when it comes down to loans or overdraft facilities that may be offered. Okay, so there can also be bank charges when it comes to taking out a mortgage. So if you don't have rent, then your capital income may have come from a mortgage, and therefore there may be a bank charge in relation to that, as well as interest, of course. Then business rates. So just like council tax for houses, businesses have to pay an effective council tax, and that is business rates. Okay, that of course is a fixed cost. Then we've got depreciation, and depreciation really is an allowance for provision of that said machinery in the future. Okay, so you are depreciating the value of an asset over a period of time, and therefore that is of course an expense that the business incurs on a daily basis, and it also helps provision for the future, as we'll see when we investigate depreciation. Then we've got salaries, a fixed cost, wages, a variable cost, and that's it. Okay, thanks.